Every trader needs a well-defined trading strategy. A strategy must tell you where to enter and where to exit clearly. In this video, we'll talk about a simple, powerful TDI trend trading strategy which can help you change the odds in your trading. We'll also illustrate this on real markets, so make sure you stay up to the end of this video to fully comprehend everything. But before we go through, make sure you subscribe to this channel and check the notification bell icon so that you won't miss any of our videos as we upload. So basically, what is the TDI indicator? Let's talk about it briefly. It is the only indicator that can read market sentiment and volatility at the same time. For this strategy, we use it alongside two other indicators, which are the 50 EMA and the 200 EMA. These are exponential moving averages applied to close. So we will respect the TDI RSI shark fin. We know that the TDI is actually a combo of several indicators, and one of those indicators is the relative strength index. So basically what we are saying here is we use or we respect what we call the shark fin of the relative strength index as explained in the next part. So basically, here's the definition of the strategy, that whoever wants to use it should actually follow only these parameters. So here's the bright criteria. We need to see 50 exponential moving average and 200 exponential moving average, giving us a crossover. By crossover, we are saying 50 and 200 should be actually making a crossover while the 50 is actually going above the 200 EMA. That is what we mean by the upside. Then the TDI must issue a shark fin at the oversold region. So I'll actually show you this on real markets where we refer to as the shark fin and where we refer to as the oversold region. Then for sell criteria, we need to see 50 EMA and the 200 EMA crossing in the downside. This means the 50 must be crossing the 200 from the upside going to the downside. Then the TDI must issue a shark fin at the overbought region. I'll also show you on the charts what we refer to as the overbought region. So let's now have real market examples for us to be able to apply this particular strategy. So I'm going to use pound against the dollar as an illustration. You can as well apply it to several instruments of your choice. You can apply it even on gold or other pound crosses or other euro pairs. In this case, what is our first criteria is defined from the slides. We've said we need to see 50 crossing the 200 EMA when we are looking for buys. So in my case, I have my 200 in white and my 50 in blue, and in this case I have the TDI on this bottom part. So if you want this TDI indicator, you may download it straight from our free Telegram channel, which I'll leave the link in the description box below. Download it, install it on your MT4, or you can even set it up using the manual in the free Telegram channel on your mobile, so that you have this indicator on the go. So basically on this particular indicator, which is the TDI, I have the RSI lines, which are in light blue, and then the green line is the one that is very much important because it is the one that we call the relative strength index or the RSI line. In this case, we are saying a shark fin is basically when the RSI line goes out of the bands and when it gets back inside the bands and gives us a crossover with this small signal EMA in red. It's actually called a signal line. When a crossover of green and red is done, it's time for us to make our entry, provided everything has been satisfied on the price chart. So let's actually have examples of trades we could have taken in the past using this strategy. We've said the first thing is to see a crossover of the 50 200 EMA in the upside for buy condition. So in this case, we can see the market doing so. Then after that, we now need to see a shark fin in the oversold side, which is the bottom part of the TDI indicator, and then a crossover of the relative strength index and the signal line in red. So it's basically green and red crossover. That is where we make our entry, and the market actually went our way. So it's basically one entry per crossover, one entry per crossover. So we are looking to be getting 2:1 or 3:1 reward to risk ratio whenever we get in, and our stop loss should always be below structure. In this case, we had a sell condition where we had 50 crossing the 200 EMA from the upside going to the downside. And did we have a shark fin? Of course, the market went outside the band, and then it actually gave us a choppy phase, and after that choppy phase, our stop loss was definitely going to be taken out by this green bar. We have to be transparent with ourselves when we are looking in hindsight, so that when it happens in foresight, we'll be ready to see whatever, to take whatever that will come. In this case, we had another 50 200 EMA cross, which is a buy criteria, and we are now looking for an entry, which is basically it's basically in a TDI shark fin on the oversold region, which is this part. We can see the market gave us a shark fin, and crossover of the RSI line and the signal line was where we were going to make our entry at this point. So the market actually went in our direction, and as I've said, we look to get 3:1 or 2:1 reward to risk ratio depending on our patience. So basically, that was the trade that was available to us. In this case, there was several crossovers. Crossover before a shark fin was issued, another crossover before a shark fin was issued, and another crossover was then issued, and our next thing was now to look for a TDI confirmation. We can see that we had a shark fin at this point, which is right here, and at that point, that is where we were going to make our entry. The trade actually went downside around 43 pips, and if we did not yet hit our take profit, it's wise to put our stop loss at entry when we are 50% towards our target, so that we can see where so that we may protect our capital as well as protect our mental trading psychology capital. So in this case, we had another crossover. The market gave us an entry around this point, and it went our way. So basically, from back testing, I've seen this strategy having around 80 to 85%, leaving the 15% to the loss side. So in each and every strategy, I always advise to backtest before you apply it on real markets, so that you create a relationship with the particular strategy in subject. On that note, we come to the end of this video. Please check out our free Telegram channel. I'll leave the link in the description box below. See you on the next one.